Good evening, everyone. Today's Monday. It's March the 25th. It is 7:30 Pacific time, and we are looking at the ES. The ES had a day that was a little bit messy, only sideways, not messy in any kind of dramatic way. Remember, the big storyboard is you wait for the deep pullbacks, you look to where support is, and you engage on those pullbacks to the long side, realizing that as volume increases, you're going to find more sellers. It's as simple as that. If you're thinking about shorting, try to wait for a big bounce before you try to short and realize that because the market is still bullish, take a look. I mean, if I draw a trend line, it's not going to be sloping down. This is an upward trend. And so people are still fairly caught in this idea that things are going to be okay. And the Fed is doing all it can to keep us okay. And so let's just keep buying on the pullbacks. Now, of course, my thought is when a market starts doing things like this, listen, the fact that the Fed was dovish 3x, not really a good thing. I'm just saying. So you have to think about, wait, if the Fed sees something that says, no, not only are we not going to raise rates, we are not going to make the balance sheet smaller, and now people are thinking that they're going to cut rates in September because they're going to be forced to because of the global slowdown. And we are in a slowdown, but why? We have a process of motion where things have been accelerating for a long time. And so you have to think about, how is that acceleration being beefed up? Is it being beefed up because revenues are continuing to grow, because, whatever is happening in the market space, people are consuming more? And people maybe probably aren't consuming more, but you have to think about that in a big picture event. And one of the things we talked about at Schwab was how earnings per share they got beefed up because in December, so many 540 billion, that with a B, buybacks occurred in the fourth quarter. And so that's going to beef up earnings per share. That's never going to beef up revenues. And so as revenues sort of flatten out for whatever reason, labor costs are rising for whatever reason, all of those things in play, it just tells us that we've got a little slow period. Listen, when we are driving on the interstate, we're going to drive down the street, and sometimes we're going to be able to drive down the interstate and we're going to be able to do 90, whatever. Not saying do 90 in a 70 or whatever, I'm just saying there are places where you can go 90, right? And then there are places where you can go 35, and it's all on the same stretch of road, and the market is the same way, folks. It has ebbs and flows. And so my suspicion is because of all the inputs sort of trimming back, the outputs are also going to trim back. So we're watching earnings estimates starting to come down. And so for the next 2 quarters, we're going to have this big sideways patch. So what are we looking at? Well, if you take a look at a guy like Keith McCullough, who runs Hedgeye and does the macro show, which I highly recommend, folks. The learning there is stupendous. If you take a look at that, he's going to say things like, hey, we've got these cross currents of motion occurring in the market, and what we have to look for are what relationships hold tight in this kind of space. Again, a probabilistic estimation of where people put their money. He's been calling utilities from the low part of mid-January. He's been, maybe even longer than that, he's been calling gold long for a while. He's been calling the treasuries on the right track. A lot of different spaces where he says, hey, listen, take a look at what's happening in the market. When this happens in the market, this happens with these sectors, right? He's been calling the REITs, just doing a phenomenal job on tracking process of these big charts overall. It's just been tremendous. So have a look at that. But he's talking about this global slowing event, and at the same time, I can look at things technically and go, wait a second, what am I seeing? I'm seeing technical divergence. What else am I seeing? I'm seeing more selling than buying in terms of, particularly over the last little bit, I've had a lot more down days than up days, and though my up days have been all right, I have diminishing up volume and I have building down volume. That doesn't tell me I've got more upside motion from a technical perspective. In fact, as I test the highs, I completely reject them every single time. So what is that telling me? That's telling me I've got sellers here, people that are anxious to get out of that market and move to a little bit of cash, and people that are anxious to say, hey, I'm really going to start moving my shorts in particular fashion way up at the top of this risk range. And again, Hedgeye and Keith have been calling these risk ranges phenomenally well. Phenomenally well. Help you with a lot of things, folks. If you're looking for, you guys know I just work with the futures. If you're looking for stocks and that kind of stuff, he just is great resource. And again, an inexpensive product for the individual, and he charges tons of money to big funds. So it's a great opportunity for us to get that kind of knowledge for such a low price. So as we take a look at this, I see the technical motion that says, yes, I'm bullish. Deep dips, gonna look for buyers. But in the grand scheme of things, when I buy, I wanna make sure that as soon as I start stalling out, that I take some profit. And the stall out event really came earlier in the day, but notice how much buying occurred here. And so for tomorrow, this is our edge. It's gonna be the same edge we were looking at this morning in terms of breaking and then rotating back to the upside, right? So this is going to be that aggressive motion. Upside is holding it right now. Where should we go? Listen, we need to test old resistance that became support that's going to turn around and go back right back to resistance. I know I sound like really a broken record saying this over and over again, but simple is as simple does. And try to make this simple. When it gets up into here, set an alert. What's your goal? Your goal is to take profit as it moves up. And if you see sellers starting to come in and force it back down, you can begin with a short, but that short has got to have a short cycle because the chart is still bullish. Doesn't mean that it won't come deeper. You just have to weigh what you're moving against. The reason I like the idea of shorting on the mechanic of the bounce up is because I have technical divergence. I can see sellers coming in every single time to these areas up here. So this is where I'm going to position a short. Right up here in the 2837 to 2842 area. Do I have a little overnight short around the 2817 region? Yes, I do. Very small, very willing to let it go up into these edges in case it absolutely rises because I have more weighting there. But small size, and I'm moving with direction of strength and motion, right? So not only do I have technical drift on my side, I have a fundamental structure that's being mapped out in the broad markets that same way. So, wow, that was a long blithering amount of time in there. Same thing we're seeing in the NQ. Look, these guys a lot more bullish, right? Because they're rotating to tech, because when the Fed stops raising rates, the financials get squeezed, okay? And the financials are getting squeezed. They rotate out of finance. Traders rotate out of financials. They move into tech. But see, tech's going to have some problem, particularly big tech. And it's not that they're going to fall off a cliff, folks. It's very, very bullish. But we've moved up so much that it's not going to be a bad thing for the market to take a breath. It really, really isn't. And take a breath could be, 69, 67. I doubt it that it goes down in one fell swoop. It's just not that kind of environment. But it could grind. And what's going to happen is things are going to happen. We'll hear something. The market will go, and it'll come down into old resistance and move that as new support, and somebody will say, oh, the sky is falling, and the same sort of thing will happen. It'll come in here, people will start buying, they'll turn around, they'll move it up. You've got to watch for that motion being the general way that charts are going to look. So overnight, we need to get up over 73.81. That's my thought. If we get up over there, we'll grind into this area of congestion. This chart is doing much better than the others, but it is coming off really much higher selling volume, right? And we're looking at technical divergence. And so if we see technical divergence, we know that even if we expand to the north, we're not going to hold to the north. That's what technical divergence tells us. The problem is sometimes our pockets are not deep enough and we get too excited and we get in early. Your job should be, hey, can I see old resistance from the past that is now starting to hold up? You don't want to sit here and go, well, I'm making higher lows and higher highs, but I'm going to short it right here because I think it's going to roll over. If your chart is making higher lows and higher highs, you've got a problem. But if it opens up and it tries to hold higher, but it can't, then you've got yourself mechanical motion that brings you into support. Right now, we're sitting in major congestion. I would look on the edges of this area with an alert first to see what's happening, and then an entry short if you want to move down. If you're thinking to yourself, hey, listen, you pull up on the deep support, then this is the one that you need to recapture, or you look to the left and you see other support action really in play for you to participate. Don't try to catch a falling knife here. Things could fade much deeper than you anticipate and then turn around and bounce. The question is, do you want to expose yourself to those kinds of pockets of risk? I do not. So here's what we're looking at. Look what happened today here in the YM. This one we know has been much weaker. What do we have? Technical divergence. But where is this sitting? It's in the neutral zone. So what does that mean? That means if I come into old resistance, new support, that's retested, another area of support. Yeah, we're moving from support to resistance to support to resistance. And that's because we're caught in the neutral zone, right? It's a byproduct of what's actually happening to the traders who are saying, listen, I don't really have anything big that's a catalyst able to move me up or down. So I'm going to catch myself in this range. And here's a big mean down here. I could easily revert to this mean and grind it over. Right? It's the law of large numbers that says, hey, if I took all of this data and crammed it all together, where's the middle of the road? What number is that? It's down here. That's a natural reversion to the mean event. Could it occur? All the time. It occurs all the time. This is just a very big cycle. And so I think we're looking at 6 months of a big cycle sideways. If we take a look at oil, however, we're looking at something that is filling in a low auction event and holding higher. Now we know this. We know that oil is upside. Here's the thing. Oil's upside for sure. It's got nice slope. It's extended from its mean of all the participants in this range. It's pretty extended from it. It's also got technical divergence. Now technical divergence does not care. Trend is always going to be better. But when you have technical divergence, you can be sure of this. If it's negative divergence, which is what we're seeing here, it tells you your highs cannot hold because of the pressure that is sitting in the undercurrent. Now, there are all kinds of things pulling on this chart. Don't really want to go into it because I'm doing feels like a 100-minute video right now. So we'll talk about that over the coming days. But take a look at this. Building negative volume. We have building negative volume, so that says we've got some sellers trying to offload at 60. So that was last week Wednesday, last week Thursday, last week Friday. This was today, and then this is our new overnight range that we're looking at. What does it tell us? Our deep pullbacks or buy zones. Where's the best bet? What's your really great trade here? The really great trade is, hey, if it comes into 58, 58.10, I'm in business. Right? Somewhere around there, 58.10, 58.20. Actually, that's the lowest that it came in today, right? What is that? 58.17. So we look at that area, and then we can say, hey, I can go long there. But what do we know here? See, if I look over here to just the last few days, I can see a ton of sellers sitting just $1.20 higher, just $1.20 higher. We know what kind of leverage sits in oil. There's a tremendous amount. Just $1.20 higher is a ton of cash. But what we have to figure out is, how long do I stay and wait in this area? And if I've got negative drift and negative momentum, I know that I've got sellers trying to push me to the south. And so here's what my waves look like. Big wave, not as big wave, really small wave. That's also called a rising wedge. And that normally will collapse into a stronger mean or a stronger support or congestion zone. And that really is right around here. And that's a super important number. Is oil going to do that? I don't know. I know a lot of people are bullish on it. Energy is a bullish thing to be in this kind of environment. My thought is, be patient. We've got a lot of rotation where things are coming into support and then bumping into resistance and coming into support and bumping into resistance. And we really have got to pay really particular attention to that. Okay? All right, look what happened to this. Absolutely broke. What can we call this? Right? People call this a bull flag. It's got bearish slope, but it breaks to the upside. If this is upward, and I've got to pull back into this range, that's why I drew this. I said, hey, listen, what should we do if we break out? We should come back, retest the level, and hold. We're sitting outside of that right now, sitting above the region. So let's take a look at where the next line of, okay, I used to be a buyer, but now I'm a seller. and then I became a buyer again. Where does that look like? Well, to me, it looks like we've got these new areas to engage in. Okay, 1322, 1325, what should we be doing? Well, we don't really have technical divergence here, and if it were a technical divergence we would measure, it would probably be a little positive. So we're sitting above everything, but look at this motion. This motion says essentially, listen, I know that gold is being used for something, whatever proxy it's being used for, dollar down, interest rates holding, all kinds of things people could say, hey, you know what, we're coming back into gold because there's no Bitcoin to play with anymore. I mean, you could think of 1,000 reasons. The fact is, this chart is trying to hold pressure. So what do we have to look at? Every time I make a new high, do I hold it there and climb higher, or do I come back down and test my support area? And over this time frame, over the last, I don't know how many, 20 days or whatever, what we've done is every time we've gone to a new high, we've pulled back and come into a support zone. And so we've had this happen and the rotation over, and then we've had this happen and the rotation over, and now we've got this happening, likely the rotation over, but it's still going to give us upside. The big thing to do is not to chase any of these things. We are not in an environment to give us big trend. We are in an environment that says, if you're patient, wait for your pullbacks. When the pullbacks come into areas that you can see are daily and weekly support, then you can engage with minimal risk. And that's really what you've got to do. I mean, there's a lot of bearish pressure sitting here. And although gold is still holding quite a bit of bullish motion, there's nothing that says, hey, listen, this can't roll over to catch a new support area. All right, forgive me for it being long, a lot of stuff to talk about. I missed this morning report, and so I wanted to put out something tonight so you could see what the overnight was going to look like and where we would end up in the morning.